We're going to go over the valuations according to my high five snapshot. We're going to look at some charts, and we're going to quickly give a brief overview. Buckle up and let's get into it. Going to be a no-brainer. Google. Google right here, right now, is essentially at where it was during, it's at the same valuation as it was during COVID 5 years ago. Now, Google has had immense growth, immense business exploration with Waymo, and obviously Waymo is the number one supplier of robotaxis right here, right now. No one likes to talk about it, but they are. They are number one in robotaxis, and they continue to expand. And yes, I understand. And yes, I used to be one of the people that said, oh my goodness, these Waymos, their LiDAR is so expensive. But then once I started to really run the numbers and understand it's about taking over the market and getting as much market share as possible, and understanding that, yes, the technology is expensive, but that car will last a very long time. And so once you run the numbers and understand, okay, if this cost $100,000 for the car and all the LiDAR equipment, if it does X amount of rides per day, per week, per month, per year, it really does not take a lot of time for that robotaxi, that Waymo, to really fully pay back what they paid out of pocket. And once they reach that $100,000, then obviously, yes, there's little maintenance stuff here and there. But once they reach that, then there is strictly cash flow machines on each of those robotaxis, each of those Waymos. So I really believe that this is a massive opportunity for Google in the long term and in the short term, because they already have these out on the roads. They are already, having some issues, but they're getting those worked out, and they're already, consistently having lots and lots of rides every single day, taking real people with these robotaxis around different cities. So it's just one of those things that if you're going to give this valuation to Tesla, you have to also give X valuation to Google for this opportunity. And I think with all of the AI and ChatGPT and XAI and Copilot, all the fears around Google losing its big search business, I think this actually levels the playing field to where you can see Google being undervalued here. And even if they do lose some of that search dominance, the Waymos will counteract that and counter that into being not as big of a hit, or not a hit at all, with the amount of revenue that they can get from the Waymos. So I am very, very bullish on Google. I think it is so overdone. I think they just had a bad news storm, and I think it's very overdone. I think it's one of those names that, in a couple years, you could definitely see it at $3 or $4 or $5 trillion market cap. And you'll be sitting there saying, wow, I can't believe I wasn't buying Google at a $2 trillion market cap at a 19 PE and a 17 forward PE. You can see on the chart a 3.43 free cash flow yield, a forward free cash flow yield of 3.73%. And obviously, with conservative numbers in here, we get to a massive fair value for Google of $264 per share, which is a 34% margin of safety, which is just massive. And what I'm about to show you on the charts, I'll show you that there's actually some room for Google to fall a little bit more based on the monthly chart and the overall downtrend that is Google and what they're in right now. And based on also EPS conservative numbers here on the growth rate, we're sitting at a beautiful around a 14% annual CAGR over the next 10 years for Google, which absolutely crushes the 8 to 10% that you would get in the S&P 500. So Google could be a portfolio cement piece, a piece that you build a portfolio around that would do very, very well. Honestly, my three favorite Mag 7 names that you could build a portfolio around right now, and we're not going to talk about the other two in this video, but I'll give them out. So Google's number one, not number one in order, but these are just like my top three that you could really build a solid portfolio around. It's Google, Amazon, and Meta. I just think there's so much growth in each of those, and I think there's so much opportunity to really be able to grow each of these businesses, and they are at a really, really great value overall. So if we actually look at their chart on Google, we'll quickly see that if you look at the Williams percentage range, you see that we were in a Williams consolidation box. That's my personal trading strategy. Once we broke that Williams consolidation box, we continued down and we had a 40, almost a 45% downtrend until we bottomed out in 2022 during that bear market. And then we obviously had a ripper rally on Google, bottoming out and then moving up and then creating another Williams consolidation box. Well, since that has happened, we actually broke down out of this Williams consolidation box again. And you see we've moved a solid 33% down from top to bottom. We've rebounded a decent amount since then, and we're really starting to curl back up on the high 5 indicator. So we have a couple mixed signals here. We have a nice volume shelf that we bounced off of too. We got down here to our 2022 highs before we went down. So we did retest this and bounce successfully. So we could see that we have already bottomed here. My big worry is that once a train goes in motion, it typically stays in motion. So when we get up to the red barrier, we typically see a retracement down to the green barrier, back up to the red, to the green, to the red, create a Williams consolidation box. When we're in our Williams consolidation box, the price will continue to rise higher. Once the Williams consolidation box is broken, you are going to have a pretty decent sized pullback. When you have that pullback, you usually create a bearish Williams consolidation box. Once you break out of that, then you're essentially going back from green to red, the pendulum swinging back in the other direction, and you rise higher back to not just the red barrier and creating a Williams consolidation box, but also your price is moving significantly higher. If you want to learn more about the Williams consolidation box, my high 5 indicator, my other high 5 indicators, my screeners, go through my courses to learn how I day trade, swing trade, long-term trade, to learn how I invest. We have a community portfolio. I'm obviously sharing the public portfolio on X and YouTube and other social medias for absolutely free to show you how to build a portfolio and to show you why you should potentially even follow someone like me, and to just show you, hey, this is how I would build a portfolio, this is how I manage it, so on and so forth. If you're looking to take your investing game or your trading game, or you're looking for a like-minded community where trading and investing meet with a high 5 community, I really think is for you. And if you'd like to give it a try, definitely just check the link in the bio and come on over and give us a shot. Lots of amazing people in the community. I actually got the chance to meet one of the people in my community and someone that's been following me on X for a while now, Sean. It was super awesome. We met in San Diego, and it was a great time getting to talk to somebody that's been following me for a little while, and somebody that just took the lead to join the community. So if you'd like to join us, if not, cool. Keep following me here. Keep chit chatting here, and look forward to continue to help you in your financial journey, whether it's here or in the community. So getting back to this Google chart, we came down, we crossed -50. We're bouncing back a little bit, but typically your train in motion stays in motion. So I could see us coming down to the green barrier. The mixed signal here is that we are kind of bottoming out and curling back up, and we bounced right here, turning this previous resistance into support now. Previous resistance, once we broke support. So it would take a lot to break this 150 area. But if we did pull back, and we could get down here on the monthly, even if we just came back for one more retest down here to 145 to 150 area. So keep your eyes peeled. I would continue to DCA or use your strategy that you use to be buying into Google. But I think it's a buy right now. Like I said, I think the fair value is all the way up to about 260 some. So I think it's a continuous buy as we go higher and higher.